You do not need to be a high earner to buy a boring business that can make you more money year over year than your current job. I know it because I've lived it. I started out as a JP Morgan employee working 60 hours a week, quit, and now built my way up to making over $1 million in profit from my boring businesses last year. So today, I want to give you the information I didn't have when I started out and tell you exactly which types of boring businesses you should buy based on your annual income. You'd be surprised what's possible. Let's dive in. First off, we're going to start for those of you who are making less than $50,000 a year, okay? And we're going to be focusing on a few types of businesses that fall into this category. Number one is going to be SaaS companies, okay? Now we're talking about micro SaaS. We're not talking about a SaaS company that's doing $1 million in ARR. We're focusing on small SaaS companies that are doing a few $1,000s per month in revenue. Now, why are these an opportunity for those of you who are making less than 50K? Because the typical price for a lot of these micro SaaS is going to be a multiple on the revenue that they're making. A lot of times the multiple is not going to be that high because one, they're making very little revenue per month and they're also not that profitable. Most of the money is going towards growing the SaaS through marketing. So a lot of times you can get these from 1 to 3x their annual recurring revenue. So under $50,000, you can find a bunch of SaaS companies for sale that are producing revenue, that have product market fit, and the founders are looking to do a quick exit and move on to the next one and kind of build and repeat, sell. And that's kind of how they do this. It also reminds me of my first deal, which was a SaaS company. In the fitness niche, it would help gyms run. So it was a CRM that had a lot of different marketing tools that gyms would use to grow their business. Now, I was able to get into that deal for $5,000 out of pocket. The way that deal was structured was I gave $5,000 up front, and it was now my job to build the team and to raise money. So it was more of a sweat equity deal for the eventual amount of ownership that I had in that business. But a lot of these micro SaaSes are only $5,000, $10,000, $15,000 for themselves to own 100% of the business. Now, this is not something to be taken lightly. Any business you buy, you need to do proper diligence, which means looking at the financials, looking at tax returns, looking at what the team that makes up and what each of those team members do, how long have they been doing it, so you can truly understand what the opportunity cost is going to be in acquiring this business and then scaling it. A lot of different things you can do to scale these micro SaaS are not that complicated. A lot of times they have one channel that they've used for growth, whether that is ads, whether that is organic, or whether it's going out and doing referral partnerships or doing influencer partnerships. Find out what channel they're using, seeing if you can increase that by doubling down on it, but also opening up other channels. Now, once you scale this SaaS company past the $1,000, $2,000, $3,000 per month of revenue, and you are able to get it up to $10,000, $15,000, $20,000 a month of revenue by opening up these other marketing channels, by being able to find that product market fit, now those multiples start to increase. So something that you bought for 1 to 3x ARR can now be sold for 4 to 7x ARR. And if you were to scale it past $50,000 or up to $100,000 a month, depending on your rate of growth and your churn rate, those multiples can even be higher. They could be 7x all the way up to 10x for really fast growth SaaS companies that also have lower than 10% churn. But there is a whole strategy out there where you're buying these companies for $10,000. You're able to make some improvements, opening up a different channel for growth, and sell them for $20,000 6 months later. There are people who just do that as a main point of strategy. I just want you to know that there is no excuse in terms of being able to buy a company, no matter what salary you are making or how much capital that you have to put into it. There are deals that can happen for as little as $1,000. But remember, the fundamentals are the same. You need to do your proper diligence. You need to understand the financials. You need to understand the management makeup of how this business is being run before you get yourself into a situation that might not be ideal. The second one is newsletters. Now, newsletters are one of my favorite, okay? This is something I'm actively looking at doing more of in 2026. Now, newsletters, again, can be bought for $500 all the way up to $10 million, right? They're like a lot of businesses, but the cool thing about newsletters is that you own the audience. Now, I have a social following on Instagram, on YouTube, Twitter, LinkedIn. All those platforms I don't own. At any point in time, I could get kicked off those platforms for violating the terms of service, or maybe they just don't like my face anymore and they can kick me off. And there's really not much I can do because I don't own it. A newsletter, you own your audience. You own the medium, which you are then communicating to your clients. And you can sell as much as you want through newsletters. And you can sell however you want through newsletters. There is no way or terms of service or anything else in which you can sell to those people. You can sell 10 times a day or once a month. One of the beautiful things about newsletters is that every time you send out an edition of your newsletter, let's say your open rate is 40 or 50%, which is a good open rate. So if you have 5,000 subscribers, every time you send out a newsletter, 2,500 of them are reading it. And let's say it's about 200 to 500 words per newsletter edition. And you're talking about the topic or the service that you provide. Well, 2,500 people every single week, if you send it out weekly, are reading about your service. And so after a few months of that, they are primed and ready to purchase whatever that service is. They're primed and ready to receive an offer sent from you to them. Another great thing about newsletters is that you can monetize them in so many different ways. So you can have sponsorships. That's where a company will basically pay you to have a spot in your newsletter. So you would have kind of a call out or a highlighted section of your newsletter that this company is putting an ad in, okay? And they'll pay you for every single edition you put out, depending on the size, depending on the open rate. They will pay you a certain amount for every edition to put them into it. Another area which you can monetize newsletters is on digital products and eventually high ticket products, which is something that I'm doing with my newsletter. So maybe your newsletter is about gardening and once a week you send out a newsletter edition that talks about different techniques of gardening. Well, after building up an audience, you can then start to sell digital products that talk about gardening or talk about maybe planting a certain type of plant or flower, and you have a product. You put out an ebook, you put out a course. And these are things now that your loyal subscribers who read your newsletter every single week will then purchase because you've already built trust with them, because they're opening your emails every single week, they're reading your content, they like it, and now when you offer a product, they're gonna be primed and ready to jump on it. Another aspect of this is high ticket, where you are not only giving out value every single week or multiple times a week, but now you're going to offer a service where you're going to be more doing a hand-holding, one-on-one type of service that's going to walk them through whatever it is you are teaching about. So if you are doing a real estate newsletter, if you're doing a business acquisition newsletter, if you're doing a marketing agency newsletter, well, you'll offer a service where you help your readers to go and recreate the success that you have had and the success that you talk about constantly in your newsletter. And then offering a service on the back end that helps those who are readers now become clients who are also going to have the same results that you have been able to get. Newsletters can be bought for really good prices, and the multiples are lower than SaaS companies and other products like apps and other online digital businesses. And the cost to grow newsletters, especially through paid ads, is a lot lower than other types of growth models for other types of businesses. I'm super bullish on newsletters. 2026, I'm really focusing on them. If you want to check out a really cool place to go see all newsletters that are for sale, we'll put it in the link below, but it's called lettertrader.com. Lettertrader.com. Go check it out. You can find the opportunity from buying one of these assets and doing multiple monetization strategies to literally 2, 3, sometimes 5x your investment in a short period of time. So check it out, lettertrader.com, link in description below. The next one is vending machines. Now, vending machines, you guys probably know what these are. Anytime you go into a hospital, you go into the DMV, you go into a bunch of businesses, you're going to find a vending machine. They are machines that are stocked up a lot of times with food items, could be drink items. And once they're stocked up, then they kind of just sit there. And it's a passive revenue source. People come up, they pay, they get the product, and the only time you have to go back is when the products are empty, you go back and fill them up. And a lot of times you get someone else to do that for you. Now, vending machines are very affordable. You can get started investing in a single vending machine for a couple $1,000s, and that's for a new vending machine. And they're state of the art. They have not just cash, they take card. There are a lot of great vending machine opportunities out there. One machine can bring in a few $100s a month. Depending on the location, it could be up to $1,000 plus a month in revenue. And so these are not to be slept on. To really get started in vending machines, it's all about getting the right location. So making sure that you find a great location, has a lot of foot traffic, go to the person who owns it. You can either make a deal with them where you can do a revenue share. So you put your machine in their location and now you're gonna split the revenue with them. It could be 10%, 20%, whatever makes sense financially for the amount of volume you think that machine can do. Or sometimes because it's such a benefit to the foot traffic in that location, sometimes these location owners will just say, yeah, put it here, because I know that by having it, people are going to traffic more to their business or the service that they provide. Okay, so we went through a couple different options for those of you who are making under $50,000 a year. So let's now up the ante. Let's say you make up to $75,000 a year in income. Here are some of the businesses that you should be focusing on. Vending route. So we talked about a vending machine, a singular machine in the up to $50,000 income range. Well, now when you're at 75K, this is a good spot where now instead of just getting one machine, you can buy a route, which is 2 or more machines in different locations. So you might buy a vending machine route that has 10 vending machines that are spread across, let's call it 5 locations or 10 locations. So now you're buying an actual business instead of just buying an actual asset like one vending machine. Now you're buying an active business that is generating revenue. Typically, when you're looking at a vending route, there's already a person who is filling it on a weekly basis. Sometimes that's the seller. If it gets to a certain size, they'll have a full-time person who is filling it up, restocking the machines to make sure that no revenue is lost. So when you're making that 75K a year now in income, to buy a route, the route could be anywhere from $5,000 all the way up to $5 million. But typically when we're talking about small routes, these are definitely purchases that can be done between $10,000, $20,000, $30,000. And you can get a route that is revenue producing and has multiple machines in it. Next one here is a pool cleaning route. Now, under $75,000 a year in income, you're looking at a pool cleaning route that is probably doing around $100,000 a year. Okay, so it's a smaller route. Now, the margins on a pool cleaning route usually are pretty good. You're talking around 30% margin. So on a route that is doing $100,000 a year in revenue, you're taking home probably $30,000 to $40,000 in profit. Now, these types of routes are all over the United States, but focusing on routes that are in markets that have year-round service. So I live in Florida. Florida, year-round, people are using their pool. If you're in the Northeast or Northwest or in the Midwest, these are markets where they're very seasonal. So this is more towards those of you who are in towards the South. So we're talking Southern California, states that are warm and do not snow year round, because that is where people are going to be mostly using their pool. So a smaller route is going to be a route that's typically doing anywhere under $500,000 a year in revenue. Now, mostly for those of you who are under 75K in income, I would focus on the ones that are right around $100,000, maybe $200,000 a year in revenue, because those are going to be $30,000 to $60,000 a year in profit. And those will trade typically at a couple times their cash flow. So maybe it's going to be $100,000 or it might be $120,000 for the entire route. Now, with that type of money, you're typically not going to get bank financing because it's too small. So you're going to be putting down a down payment and then doing seller financing as a structure to purchase these. Now, the reason why I like pool routes is because of the recurring nature of the product. Pool routes, every single week, that pool needs to be serviced, or every other couple of weeks. There's also a lot of opportunities for upsells, helping fixing the equipment, cleaning the pool cage. There's a lot of different things that you can do to increase the LTV, the lifetime value of that customer. You want to look for pool routes where they are condensed into an area. So if you have 50 pools that you are servicing, it's great if those 50 pools are all in the same HOA, because the time between those pools is going to be very low. So you can service those pools and be as efficient as possible. Last but not least in this category is an ATM route. So an ATM is more expensive than a vending machine. An ATM, you're going to be looking at more between the $5,000 and $10,000 range. Now, ATMs are great. You can go out and you can start buying a single one, or you can go out there and buy a route that has a couple different locations. I would recommend, if you're up to $75,000 a year income, I look for a route that at least has multiple locations. One, because they're going to have at least some systems and processes already in order of filling those machines. And two, it gives you a little bit more stability. So if you were to lose one location, then you're not losing all of your revenue. You're able to have enough time and you have enough cash flow to go and get another location. Now, all the ones I'm talking about right now, these are typically not going to be enough to pay to fully leave your current role or job and do this full time. This is meant to be a side income at this income level, okay? You're just getting started with the first acquisition, a small one, and you're looking to build it. ATM routes also going to sell between 2 and 4x on the cash flow. Now, as you scale that route and you get that route up to $500,000, $1 million a year in revenue, you having 50 to 100 different locations, now the multiples can expand. Now, instead of a 2 to 4x, it'd be a 3 to 6x, or it could be a 4 to 7x, depending on how big you get that route. In ATM routes, how do you expand? You go out, you find more owner locations, you negotiate a contract with them, you then purchase the ATM or lease it, you put it into the new location, and you start making money. All right, so now we're gonna move on to those of you who make up to $100,000 a year. By making $100,000 a year, you're gonna open up to most small businesses. Some of these are gonna be owner operated, and some of them are actually gonna have management staff. Let's start off with an accounting firm. For those of you who are making up to $100,000 a year, and if we're looking at accounting firms, now we're going to be looking at firms that are probably between that $500,000 to $1 million a year in revenue. Accounting firms are great because they trade on a different valuation model than most of the small businesses. Accounting firms are going to sell between 1 and 1.1x the previous year's revenue. So if an accounting firm did $500,000 in revenue the previous year, That's what they're going to sell for. Now, typically at this size, you can have one top accountant who's typically the owner, and then they might have another staff accountant with them, sometimes up to two if they're getting closer to $1 million in revenue. Now, when you're looking at buying these businesses, it's really important that the owner, the seller, right, who's most of the time is an accountant, does not leave right away. You want to lock them in for at least one tax season, if that is the type of accounting firm where the majority of their revenue comes from. You want to lock them in for at least one tax season before you transition them out and find someone to replace them. Now, the larger accounting firms, they're going to have a full staff that's doing most of the client work, and the owner typically is removed from that, and now they're more in a management role. Those are much easier. But again, we're focusing on businesses for those of you who make up to $100,000 a year. So that is what we're looking at in terms of accounting firms. Now, their profitability is really good. You're looking at 30, sometimes as high as 50% in these types of firms. So you buy $1 million accounting firm, you could be making up to $500,000 a year in cash flow. After your debt service, you'll be looking right around 300 grand in cash flow from it. The most important aspect of accounting firms is making sure that transition period is protecting you. So you want to make sure that you have a forgivable seller note that's tied to the performance of 1 year after the purchase. So over the next 12 months after you purchase it, you want to make sure that that firm is hitting certain performance metrics before they get the remainder of their payment. Typically, I like to do at least 20% seller notes that are forgivable based on the performance of that firm. All right, so outside of accounting firms in this range, I also want to talk about pest control. Pest control is an awesome business model, all right? You guys have probably had people who knocked on your doors before selling their services. It's recurring. And the great thing about pest control is it happens all outdoors most of the times. So for me, my pest control guy will come once a quarter. I don't even really know when he comes. I'll just get an invoice talking about what they did, some pictures and this and that, and it's paid, right? Because especially living in Florida, we got a lot of bugs. If I don't do it, bugs are going to be everywhere. So I'm very motivated to make sure that doesn't happen. So pest control is great. Now, in this same category where you're making up to $100,000 a year, you're not going to be able to really qualify unless you have a lot of other assets or you bring on a partner. You're not going to qualify for those $1 million plus pest control firms. Typically, you're going to be looking at ones that are going to be in the $500,000 range to the $750,000 range. They're typically doing between $100,000 and $200,000 a year in cash flow. After debt service, you're looking at around $100,000 a year from that type of firm. Now, the cool thing about pest control is in a lot of states, you don't need any special type of license or is licensing required. But to get that license, you don't have to go through a huge amount of schooling or anything else. That's something that you can get relatively easy compared to other types of industries out there. All right, so now let's up the ante to $200,000 per year. Okay, so you're making up to $200,000 a year. So what are some of the businesses now that you should be focusing on? I'm going to go through three. First off is landscaping. Now, landscaping, the reason why I didn't mention it before this is because smaller landscaping companies that are making less than $800,000 or $750,000 a year, I don't necessarily recommend people buy them because they're so small. They're typically just doing residential and they're constantly churning customers because some other person is willing to cut the lawn for $10 less. Also, you're competing against just the average Joe who could go to Home Depot and buy a couple $100 lawnmower and do it himself. Or go to his neighbor and say, hey, I'll cut your lawn for half of what those guys are charging you. Those are not the type of customers you want to have, right? So I like to see ones with scale. Once they've had scale, once they're doing over $1 million a year in revenue, now those landscapers are not only doing residential projects, they're typically doing commercial, and they're also doing large projects like HOAs. Those are a lot stickier, and also it's a lot harder for the average Joe to compete against you because they can't do a large project. And so those are the type of landscaping companies I like, which means you have to have a income that's usually a little higher, as well as assets. The reason why we're looking at these when we get to up to the $200,000 in income is because typically we want larger landscaping firms that already have in place GMs and management where the owner is not involved in the daily operations. So these are typically going to be priced $2 million or above. So in this space, having up to $200,000 in income is great, but also you need to have some assets. Now, what are assets? Assets could be a 401k. Assets could be a stock portfolio. It could be real estate portfolio. There could be crypto. Anything that could be collateral to the bank in when they're doing and structuring this deal. Now, I want to do a quick caveat here. All of these businesses can be bought in different ways of structuring deals. So the more creative you are in the financing, the more seller financing you bring on, or the more investors you bring on partners, anyone can do any one of these deals, regardless if you make $25,000 a year or $200,000 a year. Someone who makes $50,000 a year can definitely buy a $2 million company. That person might have a house that's paid off. They might have cars that's paid off. They might have some crypto. And those assets will help qualify them even if their income is lower. Or that person can partner with someone who has assets and the bank is going to use that as collateral. So there's a lot of different ways to do this. I want to make sure that you are not just saying, oh, I don't make $200,000 a year, so I can't buy these businesses. Yes, you can. So I want to make sure you understand that before we go too much further in this video. All right, another one here is accounting firms. I just said it for the $100,000, but now I'm saying it again for the $200,000. They're one of my best types of businesses to buy. So I'm going to probably list it in almost in every category. When you're making up to $200,000 a year and you have assets, obviously now you can buy larger accounting firms. Now, so we're talking firms that are doing over $2 million in revenue. The larger that you get in the accounting firm space, the more resilient they are, the more that they have a premium to buying them, but also they typically have a staff that is being run completely by staff accountants, and the owner is usually pulling themselves out of doing direct client work. The more that that owner has pulled themselves out of that direct client work, the easier it is for you to transition to ownership, especially if you're not an accountant. Now, I already see the comments on the video right now saying, well, Ben, you can't buy an accounting firm if you're not an accountant, or you can't buy a CPA firm if you're not a CPA. Let me address that right now. You can buy an accounting firm without being an accountant, and you can buy a CPA firm without being a CPA. Here's the caveat. You can buy a CPA firm just like I did. The only thing that's required is that you drop marketing it as a CPA firm. So, for instance, my CPA firm that I have out in Kentucky with my partners. Me and my partners are not CPAs. It was a CPA firm because it was owned by a CPA. We bought it. We dropped CPA from the name. We changed it to accounting services. We have the same clients. We do the same things. And we have the same CPAs that work for us doing the same work. It's just not a CPA firm. It's just an accounting firm. We don't need a license to own an accounting firm, right? So when someone comes back and says, oh, you can't buy a CPA firm because it's not a CPA. Correct, but all we're doing is buying that same exact business. We're dropping the CPA from the name. It is now an accounting firm, and voila, you are now the owner. All right, the last one I want to talk about here is pet grooming businesses. So the reason why I didn't talk about them before the $200,000 mark is not because you can't buy them smaller. You absolutely can. I just typically like to see these pet grooming businesses in a larger revenue bracket. The reason is there's a lot of competition in this space. It's very low cost to start. And so just like landscaping companies, I like pet grooming businesses when they've gotten over that $1 million in revenue mark, because now they're at such a scale and usually have such amount of skill set workers that not only can do your typical dogs and cats, but they can do high-end grooming, they can offer other services, sometimes even boarding. When you get to the higher revenue bracket, those are much more stable businesses. They're much harder to compete against. And they also have a brand that's already broken through kind of the threshold to where now they're well known, and usually they gain a lot of momentum because of the biggest ones in the area that they are. So I like focusing on pet grooming. It's got recurring revenue. It's a very, very sticky service. People who have their pets treat them like their kids. And once you start grooming your pet, it's hard to stop because they do it so much better than you can do it yourself. And so people tend to stick with it. There's a very high LTV when it comes to pet grooming. All right. So we just went through $50,000 income range, went through the $75,000 income range, went to the $100,000 and $200,000. Now, all the types of businesses I mentioned in here are businesses that either I have myself or my students have gone and acquired. So that's why I'm picking them, because I'm not just picking them out of my hat. I'm picking them based on data and knowing what these businesses have looked like on the inside. And those are the reasons why I'm recommending them. Also, just as we were closing out this video, if you guys like this video, hit the like button, hit subscribe, notifications so you know when new videos come out. Till next time, see you soon.